I think what we're seeing the dollar decline in terms of its overall importance. Now, it's not something that happens immediately. We're talking about an end of empire, which in the case of Rome lasted 400 years, from its peak. In the case of America, it could take the next 5-10 years, depending on events. It could even take slightly longer. But as I say, depending on events, because there's quite a lot of violence, financial violence within the global monetary system, which could upset anything, really. As far as the Chinese yuan is concerned, China obviously sees that she is in the winning position, and she's managed to achieve that basically by not upsetting the apple cart. And I don't see China taking an aggressive move against the dollar. I think that's extremely unlikely. I think what she's more likely to do is just let the dollar cook in its own juice, if I can put it that way. So this brings us on to the relationship between the yuan and gold. I've always thought that the announcement of the yuan's, of China's true gold reserves, was something that would be a bit of a last resort as far as China is concerned, because obviously to suddenly turn around and say, we don't have 2,000 tons, we've got 20,000 tons or 30,000 tons or whatever the figure is, would have a major impact on international currency markets. I mean, it would be bound to. You would really be undermining the whole of the sort of post-Nixon ethos that the dollar is the international currency, it is the reserve currency and not gold. So you can see that would be a very, very major event. And China isn't about to go on, do that, unless America does something really stupid and leaves China no option but to take action to destroy the dollar. So, but I just don't see that. I mean, that is not on anyone's agenda at the moment. As far as America and gold is concerned, there is no doubt that both the US Treasury, and particularly under Janet Yellen, and also the Fed, do not regard gold as money. It's as simple as that. Having dismissed it, it was dismissed 50 years ago. Exactly 50 years ago as money, as far as the American establishment is concerned. And they're not about to start thinking, hold on a minute, were we right to do that? So I just don't see that there is any interest, if you like, in gold as a monetary asset in the American government establishment. They do recognize that ownership of gold is still a rival to the dollar, and they remove it wherever they can. For example, when the Ukrainian situation blew up, allegedly, someone arrived and took away all the gold, and it was believed to be American, either CIA or something or other. The same happened with Libya. The same is sort of happening with Afghanistan, in the sense that anything that Afghanistan owns, which is held at the New York Fed, has just basically been frozen. So you can see that, on the one hand, the administration in America does not accept officially and even unofficially that gold has any role, monetary role at all. But at the same time, they recognize it's still some sort of lingering threat, and they better have what they can to take it off the market, as it were. So I think that's the way I would look at them, at the Americans' official and unofficial view on gold. I don't see them, therefore, adding to gold reserves. I mean, we don't know what the gold reserves are because there hasn't been an audit for an awfully long time. And if circumstances were to change such that America would have to consider going back onto a gold standard, then obviously there is a loss of confidence in terms of what America actually has that would have to be addressed. But if a government proves that it cannot resist inflating its currency, then it doesn't matter whether you replace it with anything else, unless it's convertible into physical gold, because having established that it hasn't got the responsibility to actually manage a currency properly, then nobody's going to believe it second time round. So I think the fate of digital currencies is likely to replicate what happens to fiat currencies. We have a financial bubble. Equities continue to rise, well, sort of at the moment. They are wildly overvalued on any metric, other than close to zero bond yields. So when they start going up, which is an inevitable consequence of monetary inflation, then the bubble is going to pop. And what happens then? Well, I always come back to this point. If you're worried about what's going on in a fiat money system, there is only one way to get out of it, and that is to buy gold and silver, because there is no counterparty risk at all. And I'm talking physical. I don't mean ETFs, because that is a structure which can be interfered with. You don't have possession. You can't get possession from an ETF unless you're an authorized participant. But here we're talking about the authorized participants going bust. It's got to be physical. And, sort of things like, the forward market in London, the futures market on COMEX, in that sort of crisis, they'll go as well. I mean, it's as simple as that. If you look at the paper markets like COMEX and the London forward market. I mean, the London forward market is roughly 8 times the size of COMEX. So on COMEX, you're looking at the tip of a floating iceberg, if you like. I think that's the best way to look at it. What we can see on COMEX is that the establishment, by that I mean bullion bank trading desks, are short to the speculators. And they're short to the speculators in quite large amounts. Now, that generally means that they will trade against a short position. That's fine. But always they will try and recover their short position at the margin where they can. So if the price of gold rises, let's say, for whatever reason, they will wait their opportunity. And when things are quiet, they will hit the price to try and take out the stops. And they have got very, very compliant longs to enable them to do this. And by that, I mean hedge funds. Hedge funds are not interested in taking delivery. They're not interested in catalactics, the theory of exchange. They're not interested in economics. They're just interested in trading. And their trade is a pairs trade. The pairs trade is dollars and gold. So they sell dollars, buy gold, or sell gold, buy dollars. It's as simple as that. That's all they do. Another point I'd like to make about gold is that it's not an investment. It is money, and therefore you spend it. And anyone who looks at gold, physical gold, as part of a portfolio, I think is making a fundamental error. It's not that at all. It is money. So the comparison that you've got to make is, and I'll come back to it again and again and again, the comparison you've got to make is how frightened are you of the fiat money system? Therefore, how much are you going to have out of the fiat money system? That is what you've got to decide, I think. And it's probably the most important decision of anyone's life, particularly over the next 2 or 3 years.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where do you start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.